Well, what is going on, guys, and welcome into the video. Well, guess what? You won't believe this is coming from me, but I'm on the bandwagon now, and I think you should wait for the market to drop before buying. Wait, hold on, that's not me at all. Oh, that's right, it's the best friend to the channel, second only to Gordon Johnson, and that would be Jim Cramer. And yes, before blasting me, slow down, whoa. I hear you now. Why the heck is he telling us to wait before buying if he just called the bottom on July 13th? I mean, if that was the bottom, we should all be buying before it goes up, right? I mean, that just makes perfect sense, but maybe he has a reason. Maybe he is crazy, or maybe he is just being Kramer. But there's a bigger point that I actually want to make here. This video actually illustrates a critical point and mistake I bet you are making with your investing that can honestly put you in a bad spot fast, so we're going to cover that too. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And before I forget, don't you forget to take advantage of the coupon code HODL that expires in a couple days to join the Market Insiders private group, where you don't have to listen to Kramer and instead can ask myself and a group of 6- and 7-figure investors questions anytime you want, and take 4 free courses for free, and watch hundreds of tutorials, see my watch list with price targets, see all my buy and sell alerts, and a ton more. So check out the pinned comment and get your spot now before the code expires this weekend. Okay, so let's figure this out and see how ridiculous he is this time, and cover the super important point that is vital to your investing, as this video will illustrate the point absolutely perfectly. So let's jump into this.
Maybe every stock just got too expensive. Maybe everything was simply too high.
Okay, seriously, comment down below if the yelling helps make the point anymore or gives him any more credibility. I mean, you guys tell me the Tesla bull is smarter than me anyways, so maybe there's actually something to it. Maybe I should do it more. Anyways, let me know.
And had to come down to more reasonable levels. Well, that's certainly how it feels after still one more bad day, where the Dow lost 229 points, S&P dropped 1.15%, and the NASDAQ plunged 1.87%. Getting used to that yet? We're seeing all sorts of stocks lose gobs of points. And it's often happening for no apparent reason. Sure, we've had shortfalls this earnings season, tons of de facto guidance cuts, where you beat the numbers for the quarter, but don't raise your full year forecast. However, the treacherous thing about this market is that if you see even one stock coming down hard in a particular sector, you know the rest of them are going to implode too, perhaps coming down even harder than the original culprit.
Well, I hate to admit it, he is right about that point. Not that he guessed it or anything else like that, but failed earnings for one stock is absolutely causing punishment for other stocks that are sometimes related, but sometimes not really related. I mean, look at Meta and Google taking a bath because Snap had terrible quarter and gave terrible guidance. Really? That's like saying a 56 Corvette Hot Wheels went down in value and analysts are downbeat about its investing future, so a real 56 Corvette should go down in value too. Wall Street is flat out stupid sometimes. You guys know that already, but let's get back to the video.
Of course, many of the problems relate to individual companies. Both Microsoft and Alphabet are classic examples. They reported after the close. Both reported what looked to be very good numbers, but not good enough numbers, but maybe good enough because of a weak dollar, or maybe not. If they had a weak dollar, maybe they'd be better. Strong dollar, no. Yes, it is that confusing. You can't even get a read when the stock's right in your face, and that does cause you to pull back itself. For 45 minutes, I looked at these. No one knows if they're good. I swear to God, the companies don't even know. But sometimes it is real clear, and everybody knows. Like with the stock of America's largest retailer, Walmart. It pre-announced a huge disappointment last night. I mean, one of the worst I have ever seen. And weighed heavily.
Okay, so let me get this straight here. That was one of the worst you've ever seen, Kramer? I mean, really? You're a guy who's been involved in the stock market for over 40 years and that was the worst? Come on, man. There's been weaker guidance given by Walmart in the past, much less the worst you've ever seen. I mean, did he even listen to the earnings call, I wonder? I mean, I'm really curious as to if he actually did or not. I actually encourage you to go listen to all earnings calls yourselves before you ever listen to a guy like Kramer or a guy like myself or anybody else. But I guess fear sells these days and nobody questions it. So let's get back to it.
Tape all day, bring down the entire retail cohort, if not a huge part of the market. That's easy because they're all in the same ETFs. We had layoffs at Shopify because they misjudged e-commerce's growth, just like Amazon crushing anything that even looks like an e-commerce stock.
Don't miss a second.
Okay, well, that was kind of abrupt, but the video is titled "Wait for the market to decline more before putting cash to work," but he never said anything remotely close to that. I mean, he just discussed a few earnings themes, but made no case to either buy or wait to buy anything. He just talked about market sentiment the day before yesterday, which every stock he talked about was green on Wednesday, including the aforementioned Walmart. But this highlights the biggest problem, not just with the media, not just with YouTube, not just with social media in general, but us too as investors. That's right, we are all guilty of reading the headline, looking at the title and thumbnail, and then making an assumption based on that instead of looking into it further and actually doing the work. In this video, nothing about the title was discussed. He never said wait for the market to decline more to buy stocks or anything else like that. And I know it's Cramer, and reading the headline may have all of us doing the exact opposite of the headline. But if this was not Cramer, but somebody that you actually trusted, you may have actually done exactly what the title said instead of actually going into it further. Then whatever that headline was is in your mind as you go to make decisions. And I mean, just switch out Cramer with whoever you trust most. The point is, if coming into this week you were tepid about the market or unsure as to if you should have bought the dip on PayPal or Google, for example, and you only read this title and trusted the person saying it, you missed out on a great deal on both of those stocks at the beginning of this week before the latest nice jump up in those stocks. In the case of this video, they simply put up a very clickable but completely unrelated title. That's it. And guess what, guys? Every single YouTuber and media group is guilty of doing that too, including me. So you need to watch, listen, and analyze everything you put in your head, or you will make mistakes as an investor. And here, let me give you another example to illustrate this further. Don't listen to anyone's take on an earnings call, including mine. Even big YouTubers like to pull out the negatives or the headline grabbing attention, getting tidbits in those earnings calls, and then talk about only that in their video and kind of gloss over, or don't talk about all the boring stuff that may matter more because they are creating content. I try not to do this at all, as I'm not a natural content creator like a lot of those other guys are, but it's impossible for me to catch everything, and you guys know I can't speak half the time anyways, so I may not communicate it best, or I may see something as important, and you might think something else is more important. What is important to you as an investor will be different from me because of our goals, our plan, and all that good stuff. So please do not read the headlines, read the actual articles, or watch the entire videos. And then go to the sources that they reference and read those in their entirety as well, or listen to them in their entirety as well, or listen to the entire earnings call or whatever, and then form your opinion. Hopefully this will prevent you from making a major mistake because a content creator created exciting content and kind of glossed over the important stuff that doesn't make for good content, or, like this video, the title was strictly to get clicks. And if you want to have myself and a group of 6 to 7 figure investors helping you get through this chaos, and you want direct access to me and a ton more, don't forget the coupon code HODL is expiring shortly to join the group, and you get that coupon forever as long as you stay a member, so don't miss out. And click this video here to see what I'm selling, and click this video here to see what I'm doing to make big money in this market. So thanks for watching, and we'll see you in the next one.